What's going on, guys? We haven't seen interest rates this high in over 20 years. Now, the mortgage applications are down to a period that we haven't seen since 1996. Yes, that's 27 years ago. There's a very famous investor. I know most of you guys know who he is. His name is Warren Buffett, and he once said the following: be fearful when others are greedy, but be greedy when others are fearful. How does it relate to this real estate market? Keep watching. I'm going to share two examples and I'm going to compare how this market is very similar to what we saw at the end of 22 when some of my clients and other clients all over the country locked in a price that took the label as best deal of that year. Now, typically you have two options when these kind of things happen. You could either sit on the sideline, like a lot of people will do, wait for better times, wait for lower interest rates, cheaper payments, like a lot of other people are doing with you. And then when they do come, then everyone will come back to the market and then you could start bidding each other up on prices again. Or you could use this and do more of like what Warren Buffett suggests. Be greedy when other people are fearful. When people are pulling back, the rates are up, the sellers are in panic mode. Plus you add the seasonality of real estate where we have right now November, December. This might be the only time to get in, make an aggressive offer, and chances are the sellers might accept it. Now let's take a look at this chart. Now today is November 6th. I just want to show you how this relates to last year, just what I just mentioned. So let's take a look at July 2022. You can see the interest rate, and then take a look at September, October of 22. It just spiked. I remember this period really well. This is when interest rates creeped above 7% for the first time in a very long time. People were scared, sellers were scared, and you could see that it starts coming down. However, when that happens, sellers panic and we could make the best deals. I remember end of last year, like we were getting seller credits like crazy high, making offers below list price and getting seller credits. Now, fast forward to today, very similar situation where if you look on the chart, we have August, September, where we first touched 8%. I've been doing this 9 years. I have never quoted anyone 8% until this exact period. And fast forward, now we're in the beginning of November. I'm already seeing deals being made where we could go under list price. We could ask for seller concessions. So it's very, very similar to where last year ended, where people were able to lock in the best deals. And now this year is looking like it's very similar, where we're able to lock in much lower deals. Now I picked a specific example for you guys just so you understand how to better leverage this kind of market, how to better take advantage of all the fear that's going on in the market to lock in something lower for yourself and not wait for when the rates come down and then everyone's going to be back in the market. Now, so 700,000 is the price that I used for the following two examples. Now, the type of borrower, let's make one assumption. This person has no debts. This person has a credit score of 720 and higher, and this person makes 10,000 per month gross income. Now, those are the assumptions I'm working with. Now, let's roll. So first, we're gonna go over FHA loan, and after we're gonna go over conventional loans. So first, let's go over FHA loan, pluses or minuses. What kind of pluses you could expect on an FHA loan? Lower credit score, lower income requirements. Oh, and one of the best things, especially in a market like this, FHA with the minimum down payment allows you to do 6% of the price as a seller concession. Now, in this kind of market, we're using this $40,000, $50,000, $60,000 to offer our clients like killer deals and buy downs. We'll get to it later, but this is one of the biggest pluses of FHA. The minimum down, you could ask for 6% of the price back. Now, some of the minuses, FHA does have mortgage insurance just like a conventional loan. However, they do have something called an upfront mortgage insurance, which in this case is going to be $12,000 one-time fee, which can get financed, but long story short, it is one of the top FHA. You do have this upfront fee. Appraisals are harder to pass, and the appraiser is going to be looking a little bit more thorough on an FHA loan versus a conventional loan. If you have a spouse, their credit report, their debts are going to have to be applied towards your qualifications. So if your spouse has like 2 cars on their name, so those monthly payments, even if you're not on there, are gonna have to be calculated against your income. And another minus, so FHA does require a little bit more down payment. As we get to the conventional loan, you'll see the difference, but FHA requires 3.5% down payment. Now let's jump right into the conventional loan. What kind of pluses and minuses? Pluses. So there is no upfront mortgage insurance like we saw in the FHA case. So no $12,000 upfront, just the monthly mortgage insurance. Down payment could be a little bit less, only 3% versus 3.5%. Appraisals are much easier to pass. If you have a spouse, they have their own debts, conventional financing, you don't have to include it. Condos are much easier to pass through conventional financing as well. Now, what kind of minuses conventional loans have? So if you're doing a minimal down payment, 3%, so conventional financing only allows you to, as the seller, for 3% of the price back. In FHA, we had 6%. Income's a little bit tougher to qualify. They have their own guidelines. FHA is historically a little bit easier. And the FICO score needs to be a little bit higher if you're talking about a conventional loan versus an FHA. FHA has deals where you could go under 600 sometimes. Conventional, you really need a minimum 620 to even get in the game. So this is the cool part of the video. Let's kind of go deep. I know a lot of my viewers, you guys enjoy this kind of content. I know numbers is really big. I myself, I'm a big fan of numbers. I mean, obviously I'm in the business for 9-10 years, but also just where I live, I'm in the Bay Area. It's a very IT tech scene. So people that I work with are engineers. So we love going into numbers. Now let's take a look at this example. So we already went over the borrower. Now this is a $700,000 price. Let's assume this house is on the market for 2-3 weeks. We have 2 options. We're gonna make a conventional offer, but we're gonna try to kick the price down 6%. So we're gonna make an offer at $658. And then option 2, if you watch later in the video, we're gonna do an FHA option, which we're gonna give the seller the $700,000 they asked for, but we're gonna ask for 6% back in the seller's credit. So $42,000 back. Let's do conventional first. Price $658, 3% down payment, which is $19,740. We're financing 97% of this price, and the monthly payment is going to be $4,916. This includes tax, insurance, PMI, everything in one, except utilities, of course. Now, in this example, the interest rate is 7.25, 30-year fixed without any points, anything extra. This is the market rate today, and your cash to close is going to be $38,000 roughly. Now let's take a look at very similar, same house. Now we do FHA financing, and we're not gonna lower the price. We're gonna keep it at 700, but knowing the type of market we're in and the type of deals that are being made right now, we're going to give the seller the price, but we're gonna ask for $42,000 back to credit for your closing costs. Now, so the down payment is 3.5. Remember, it's a little bit higher. So in this case, it's $24,500, but we have $42,000 coming back from the seller. Now there's a very interesting program that I guarantee not many people even know about. My first property when I bought in the Bay Area in 2017, I also used the same exact program. FHA has a 5-year arm. Most people don't know about it. So the rate today for this program is 5.875. 5-year arm just means that the rate is guaranteed for 5 years. It will not change anytime during that period, but chances are you will refinance this loan, so you won't even get to the point where it adjusts. Now, monthly payment in this example is $4,474, already much lower. If you're paying attention to the previous one, we're gonna wrap it all around. I'll show you the differences, but $4,474 includes tax, insurance, private mortgage insurance, everything except utilities. Now, the cool thing about this is your cash to close on this FHA deal is only $27,000. Let's compare the 2 options. Now, FHA is $11,000 less out of pocket to close the deal. Yes, we made a higher offer, but it's $11,000 lower. It's $442 per month lower every month. Guys, in 1 year, That's $16,000 that you get to keep in your pocket. In 2 years, that's $32,000. Think about this. By going this route, in 1 year, you have $16,000. You add to it another $11,000, $12,000. You're in a position to do this again. That's the strength of all of this. So to me, it's clear winner. Now, I know what the haters are gonna say. I know what a lot of people on the internet are thinking, like, Steve, but you're encouraging us to beef up the price and we have to pay more property taxes over 30 years. Like, it's probably not the best idea. Look at this. I'm gonna break it down for you guys. Now, I'm using the property tax rate like we have in California, which is 1.25 of the purchase price. And I've already compared the difference between 700 price and 658. The difference per month, hear this out, $44. Now, if you multiply that by 12, that's $528 per year. You're paying more. But remember, you're saving $16,000 because of the way we set up the financing. Now, in 10 years, that overpayment in property taxes is roughly $5,000. Guys, chances are you're not gonna live there past 10 years. You're gonna sell this house, you're gonna make money, you're gonna use the equity to buy something else. Long story short, take the benefit today. You have a chance to pay less per month and save $11,000 just by going through this creative FHA financing. Thank you guys so much for watching. My name is Steve, I'm your mortgage broker. If you have any questions, if you have any feedback, please, I'd love to hear from you, and I'll catch you on the next video. Thanks.